Hi, I'm Crystal McKenna, your realtor with Fathom Realty.
I'm Janine Rick with Primerica Financial Services. We help to inspire people to reach their financial goals. And Nikki's next.
Hey, I'm Nikki with Sun Street Mortgage. I'm a senior loan officer here, and I'm really excited today because we have our credit management team here. Ms. Ellen Cooper is going to give us a lot of really interesting tidbits about some of the topics that are going on with forbearance. So welcome, Ellen.
Thank you. I'm Ellen Cooper, and I run the credit department for Sun Street Mortgage, and I'm really happy that you asked me to be here today. Today, I'm wanting to talk about forbearance. It's the thing that everybody seems to be talking about, and we really don't know a whole lot about it right now. The rules keep changing, and what we're hearing, there's a little bit added to it each and every day. And so I'm hoping to start with, why did we get in this predicament when interest rates are so low and there's so many people that are wanting to buy mortgages or buy houses and obtain mortgages? And so I want to give you a little bit of background of what's going on behind the scenes that most people don't get an opportunity to see. And then we're going to talk about forbearance and what happens when people ask for one. And then we'll go from there. And I know that there's going to be a Q&A that's going to follow after this so that you can ask any follow-up questions that you are going to want to ask. So the first thing to understand is that lenders usually are not lending their own money whenever you apply for a mortgage. Most lenders today use what's called a warehouse line, and it's basically a consumer's equivalent of a credit card. So let's say that you go and apply for a mortgage with Sun Street Mortgage today. What we will do is we will close the loan in our name with the intention of selling off the loan to an end lender. And when that end lender purchases the loan, what they're basically going to do is they're going to offer Sun Street or whoever your lender is a percentage of that loan amount for originating the loan for them. For the instances of our conversation today, we're going to call that 1%, although certainly that could vary. So we sell off a loan. We're going to use Chase as the end lender, even though that may or may not be true. We're going to sell off the loan to Chase Mortgage. Chase Mortgage would then pay Sun Street Mortgage, we're going to call it 1%, to purchase the loan. So basically, for the cost of 1% of your loan amount, we're able to originate a mortgage for Chase, which is most likely cheaper than Chase could actually originate the mortgage themselves. So they're happy to do that. But they can't hold on to the loan for a long time either, because if they continue to purchase loans and it required 30 years for them to receive their money, very quickly they would run out of money. They're in turn going to turn around and sell it to a government entity such as Fannie Mae, Freddie Mac, or Ginnie Mae. Those are people that are going to insure the lender against any loss should you default on your loan. Well, what's happening today is lenders are a little bit running scared. We have to have the end lender to purchase loans because lenders would run out of money. But in the event that you were to not be able to make your payment, what many people don't realize is whoever that servicer is, we're going to call it Chase in this instance, would have to promise Fannie Mae, hey, Fannie Mae, we know we actually sold you the loan and that you're insuring the loan against loss. But what we promise to do is we're going to send out the bills every month to the customer. We're going to look like we're actually the lender. If there needs to be any foreclosure action, we're the ones that are going to pursue it. If there's going to be any late payments that need to be charged or any customer service type of stuff that needs to be done, we will go ahead and handle that on your behalf. Well, for that, Fannie Mae would give Chase a servicing agreement fee every single month. Typically, that would be in approximately 30 basis points. So it would take them about 3 years to be able to break even on what they purchased the loan from us for. Well, in a market like today, when there's so many refinances going on, people are refinancing out of that loan within a 3-year period of time. And it has left the servicers kind of scrambling because they're being refinanced before they even recoup the money that they have purchased that loan for. That has lenders a little bit scared. Last year, at the end of the year, at the end of 2019, one of the very large banks ended up with about a $12 million profit. It's a large bank in Tucson, with about a $12 million profit for loan origination. But then they turned around and lost about $9 million on the servicing side, simply due to refinances happening before they could recoup. Now we have gone into 2020, and we're 4 months into refinance is still very heavily happening, which is awesome for us, the borrower, not so great for the servicer. In addition to the servicer saying, hey, Chase, or Fannie Mae, sorry, I will go ahead and make that payment if my customer doesn't actually follow through and make their payment. Well, now with the CARES Act says if the customer has been really affected by COVID-19, in addition to the fact that you have already promised to pay, you are going to have to continue to pay that for all of these people that are now going into forbearance. So the servicers are losing income both off of customers that would normally go into default, and that's already factored into the pricing equation that they're working in. But now also there's going to be people that are going to have to go into forbearance. And the forbearance rules say, if a customer has been affected by COVID-19, they can, and you, the lender, if you're in a government-backed loan, will have to grant that borrower a forbearance. The initial time frame can be up to 6 months, or 180 days is more factual. Then when they get closer to the end of that 180 days, should they require another 180 days, the lenders are instructed to again allow the extension. What ends up happening is borrowers are walking into this all excited, basically thinking it's free money. The servicer's not enjoying it, but they're mandated, they have to allow it. And luckily, Fannie Mae and the government entities stepped in and said, you know what, we're only gonna hold you accountable for up to 4 months instead of what could be a full year. So that's helped them a little bit better to feel a little more comfortable about servicing loans or picking up your loan and acting as a servicer on it. When the borrower needs to approach a lender, they would contact the lender and say, hey, I've been affected by COVID-19 and I need to see what my options are. That is the best way to do it. Don't tell them what you want them to do. Ask what's available for you to do. Chances are they will either recommend a modification of your loan, which just changes the loan terms to something more favorable that you'll be able to continue on, or they will offer you a forbearance. Now, people hear the word forbearance and they interchange it in their mind with loan forgiveness. That is not the case. They are not forgiving your loan nor forgiving the payments that are due. Instead, what they're looking at is, we will go ahead and allow you to not make your payments for up to 6 months. And if you're unable to make that payment for 6 months, we can handle it in this manner. And they will offer you what that lender is willing to do. In most cases, they have the ability to just tack those payments onto the end of the loan, as long as it doesn't make your loan exceed an original 30-year term. If they tack them onto the end of the loan, it's going to include interest for the extra principal that is due during the entire life of the loan. So let's say if you miss 6 months, you may actually end up making 38 payments or something like that to account for the extra interest that has accrued. They may also say, hey, it's all due and payable at the end of the loan. Now, that is not what the government intended or wanted to happen, but there is such a thing as contract law. And contract law, there's question in the courts right now over what is the deciding person. Is it contract law or the federal government? Which one wins when there's a conflict of what's been done? You, the borrower, has signed a paper saying, I promise to pay as blah, blah, blah. Well, if you've agreed to pay, then according to contract law, if you don't pay, then you're in violation of your contract. But if the federal government requires the lender to say they'll do a forbearance or offer you a forbearance, then of course the lender is going to do that. But how they recoup on that has still been left undetermined. So So back in 2008, I was in the industry at that point as well. And there were a lot of relief acts that were going around at that time to help the consumer as well. What happened after the fact was a lot of random audits. And they would contact borrowers and they would find out exactly what was going on and why they ended up needing the help that they needed. And if in the audit it was discovered that in fact they really did not need the help and they had not been affected by the economy, it was very possible that there could be fines and there could be additional things that happened. So my recommendation is, if you need a forbearance, absolutely apply for one. But if you don't need a forbearance, I wouldn't recommend that you game the system, because it is very possible that you could end up with some legal action against you that it would have been easier just to make your payments. If you've applied for a forbearance and your lender has set up terms and agreements, and let's say that it was set up for the original 6 months, if in fact something happens and 3 months down the road, you no longer need this forbearance, there is nothing that says you have to stay in it for the entire 6 months. You can go and ask for it to be sped up, and you can say, okay, I am capable of making these payments, we're back on track. Additionally, because I work in the credit department and I look at people's credit reports all the time, we do see a lot of people that are still struggling from 2008, and here we are 12 years later and we're dealing with it again. If you do not have a reasonable expectation of being able to get caught up at the end of the day, don't just bury yourself deeper and deeper and deeper and hang in here and continue to say, I do have a reasonable expectation of being able to pay again, if in fact you don't. Forbearance, foreclosure, and bankruptcies are all a lawful legal recourse that happens when something happens to your finances, whether it be beyond your control, or maybe you were just young and dumb. We've all been there. And when things happen and there isn't a way to be able to get back on track, the best possible thing you can do is communicate with your lenders. Let your lenders know where you stand. Ask them what's available for you to help with. Many of our customers that we see in the credit department are simply people that don't know how to communicate with their lenders. And so they end up digging in deeper and deeper and deeper, and often they leave the recourses way too late. And then it just drags on that much further for you. This is something unexpected. It is something that happened that's completely beyond your control. When you are ready to start paying your borrower or your creditor, make sure that you start paying them and you pay them as quickly as you possibly can. If, let's say, you're only short by $800 a month and your house payment's $1,000 a month, okay, start saving the $200 a month. It's less that you're going to have to come up with later down the road. Don't bury your head in the sand and hope that something's going to happen and you're going to get a raise and you're for sure going to get rehired and all of those type of things. Make sure that you stop the heartache right now as to the best of your ability. Limit what you're spending money on. Don't go and try to live on credit cards if you can help it at all, because those come due or they hurt your credit also. And so if you do need a forbearance, certainly use the forbearance. But if you don't do it. This is not free money like the media is making it sound like. Make sure that you use it for what it was intended for, and that is people that have been adversely affected by COVID-19. So there's basically in our industry right now a triple whammy that is brewing for the mortgage industry. That is, the servicers have to guarantee the payments for at least 4 months. Secondly, there's a rule out there that says, okay, now the borrower has applied for forbearance. Now you can't sell the loan off to Fannie Mae, Freddie Mac, or Ginnie Mae unless you end up paying 7% on the loan. Now, that means Sun Street Mortgage has a loan for $100,000 and they're trying to sell it to Chase. Chase is going to turn around and try to sell that $100,000 mortgage. And because the borrower has applied for forbearance, they're only going to be able to sell it to Fannie Mae for $93,000. Okay, that's definitely going to hurt the servicing industry. Last numbers I heard was as of April 26, 7.54% of the mortgages in the US are already in forbearance.
Wow.
That is a huge number, okay? Stop and think, we're now over 30 million people that have filed for unemployment. That's another whammy waiting to happen. Can those people stay current on their mortgages, or are they going to end up losing their mortgages? Secondly, can they qualify for a mortgage when they're ready to get back into the market? And so I'm not trying to be doomsday, but the housing market is kind of hurting. And we need all of you as borrowers to step up and do your part and be responsible borrowers. Don't try to hide if you've lost your job and still try to get that mortgage hoping that you're going to be able to qualify. We have seen that happening. We understand and we believe that everybody should be able to enjoy home ownership. Everybody should be able to enjoy responsible home ownership so that we don't continue to perpetuate the problem like was going on in 2008. We want to make sure that we're protecting our real estate markets and we're protecting everybody's home values by making sure that we don't end up in a situation where we have many, many people actually going into default. Default is huge in the industry right now. Because of that, put yourself in, say, Chase's position at this point. Yes, they're a multi-billion-dollar company or whatever their value is. They're huge. Their pocketbook's much bigger than ours. But they also have a lot more risks than you and I have. Would you want to be picking up loans for somebody that you've never met and take the risk on what's going on in the market today? And the answer to that, if you guys were honest, would say, nope, I wouldn't be wanting to be in that position right now. And many of them don't either. And for that reason, Chase has said, you know what? We're not going to take any loan at all unless the borrower has at least a 700 credit score. Now, I don't know about you, but not very many of my customers have 700 credit scores. And that would mean that, okay, well, if you're going to Chase, most of the market is going to be out of the possibility of originating a mortgage right now. Well, Sun Street Mortgage, as soon as that happened, got on the ball. And they said, okay, we want our loan officers and we want our borrowers to be taken care of. And so they went directly to Ginnie Mae and was able to cement a relationship to where we can bypass all of the Chases of the world. And we can still help the borrowers and we can still help our loan officers to be able to originate loans. We can help our customers to be able to have a home ownership, even though lots of our competition can't do that. And I do know that, gosh, I'm having a total brain fade here. I know that Nikki is going to discuss that with you next week. And we're going to go ahead and discuss that. Even though mortgages are very hard to sell in today's industry, even though they're very hard to originate in today's industry, Nikki's going to tell you why we can help you with your deal still, and we can help you to still be successful as a homeowner. Realtors out there, how you can be successful as a realtor. And I'm sure this would go along the lines with what Janine Rick would tell you about being financially responsible as well. We really hope that you have enjoyed and you have learned something new today. We look forward to talking to you again in the future. Thank you so much. Nikki?
Awesome. Thank you. I always learn something from Ellen when I talk to her. She's one of my favorite people to chat with. It's a wealth of knowledge. I think it's really important that we do. It's more than just a credit score. It's that education. And you know what we're here for is to have you be able to take a look at your situation and figure out what the best route for you is. So Ellen's just great at helping people with that. So I appreciate you being with us.
Well, thank you for having me.
Yeah. Any questions?
Ellen, I have a question. So if somebody just can make a partial payment, like my mortgage is $1,200, but I can make a payment of, let's say, $650. It's going to be up to the lender of how to work something out with that.
Typically speaking, the lender is not going to do a one-time type of agreement. If you're saying you could only afford a $650 a month payment going forward for up to 6 months, It's in their discretion. They may be able to decide to do that. You're going to have to show basically that you are going to have the ability to repay that. Give them a reasonable expectation of why you think you can make that payment and why at the end of that time you're going to be able to go back into making full payments. Now that is in regards to forbearance. That is not in regards to a loan modification. A loan modification, they can certainly look at and say, you know what, we're going to scrap the original deal. Yes, you still owe us X number of dollars, but we're going to lower the payment. They could extend your loan from, say, a 30-year loan, or say you only have 20 years left on your loan. They can extend it out to the 30-year period of time. There are all of those options, and they can do that. The one thing I would like to caution all of the borrowers on, though, is make sure that you read the fine print, that you understand what it is you're agreeing to, and you know exactly when your payments are going to resume at the full amount if that is the case. And you have to make sure you stay in contact with your lender. Don't bury your head in the sand and hope that it's all going to be fine tomorrow. You need to give them plenty of time if you're going to ask for an extension on that forbearance. Did that answer your question?
Yes, thank you.
I do have a question. I know,
All right.
Ellen, you made a comment in there that these are for government-backed loans. So for like maybe a person who maybe not have a traditional government loan, this would not apply to them, correct?
Not as far as the mandate for them to offer the forbearance, no. If it was, say, a private mortgage or a seller carryback or something like that, no, the rules don't apply, nor does the recommendation from the government to extend that out to a 30-year payment instead of requiring all 6 months worth of payments plus your seventh month worth of payment as well. And so you want to make sure that you understand the type of loan you have, how the lender is going to expect it to be repaid, and don't agree to a modification or a forbearance if you know going down the road, this really is not going to work for me. It stalls the inevitable, but usually then the bad things start stacking up, and then pretty soon you've completely gone under versus the heartache that you could have had in a short term.
Yeah, being proactive is really important.
It is.
Why we're here. Awesome. Well, thank you so much.
Well, if you think about it, it circles all back around to Janine, who
Mhm.
talks about a budget and be true to yourself. Any final thoughts, ladies?
Just hope you guys got some good information out of that, and we will see you next week.
All right.
Thanks,
Awesome.
Ellen.
Okay. Bye-bye.
Bye.